Okay, so we're going to start today. I do not have a moderator here, so my friends on Zoom, if you have a question, make sure, don't chat it, just raise your hand or turn your microphone and ask me, right? So today, I want to make sure that I get everybody's questions in. So here is, what do I have, 34? Maybe I'll just wait a little bit before I give more instructions. Your final exam is going to be 30 questions, 30 multiple choice questions. I think that was the missing piece. Make sure that you do your exemplify. There's a lot of you that have not, and there have been problems, and IT has had to work with people and their computers to make it work. There is no makeup for this exam. If you wait until the last minute and I can't get in touch with IT or they're not getting back to you, then you're going to miss out on this exam. So take the time to get that done. Okay. All right, so let me just start off, Ashley.
Hi, Professor. I had a question. So for the midterm, would you say you should go like timing wise fast?
So 30 questions, 50 minutes. So what I would say is, so what I usually I guide my exams by, I sit down, so I have seen it, I sat down and I took it. And generally I consider, I usually think it should take you twice as long as me, and it worked, right? But you have to remember that I'm not looking back at notes and I'm used to doing this, right? I can punch out those numbers quickly and move along. But I know that this is new to you, so which is why I think double the time, right? So as I said before, I would not expect to have time to look up every single thing that you are going to be asked. There is time that you'll be able to look up some of them, But I would study this like a closed book exam, and I think time-wise, it should be fine. But you know what? You'll be the, by the end, you're the kind of the be all end all. So remember though, I only grade you based on everybody else taking the same exam at the same time, right? So if it ends up that nobody finishes it, then we end up scaling the exam. So it's not that big of a deal. I think you should be fine, but like I said, I'm used to doing this. Everything seems quick and easy for me, but there are going to be some of those questions in there that are going to require you really to kind of take a step back and think. Generally, the idea here is most of what you have seen, if you've done all the problems that I put up, you will have no problem. I mean, if at doing those problems. Some of them are going to be something a little bit different from what you've seen. And that is what's going to usually distinguish between the A's and the B's. So you can't memorize your way through this. You will be able to answer those questions. It just might require you to kind of stop and think and work backwards kind of thing. I think there's only, I think there were 2 of them, and I thought, oh, that's a good way to ask that, something that I hadn't put up. So that's my advice to you is I think it's going to be enough time, but if it isn't, remember, I only look at how you did compared to everybody else that has the exact same amount of time. Krill.
Hi, yeah, I was wondering, are we taking the exam the same time as our section time?
Yes, if you don't log in during your section, you won't have the code to be able to go in and do it. You are all set up to be taking this at 10:10.
Okay, thanks.
Yep, so you're gonna log into Zoom, and then I'm gonna give you the code once you're in Zoom, and then you'll be able to access your exam. But you should see 24 hours that exam is there, right? You should be able to download it, and again, don't wait. Because if you come in and think I'm ready to take the exam and go in and look and see it's not there, it will be too late for IT to help you. Caroline.
I just want to make sure it's this Zoom link, right?
Yep, regular class, except you won't be in class. You'll be wherever you are in a nice quiet place. You're gonna log on to Zoom. Your computer will not be locked, so you'll have access to your computer. The only thing you can't have access to is working with somebody else, right? So this should be your work, but you will have access to everything. Okay. All right, good. All right, so ready to do our final bit here for this chapter. So what we're going to do now is we're going to put everything together with these journal entries, right? So the journal entries are just going to explain the flow again, except showing you the debits and credits of how it all works. We're going to talk about the control account and how to make that adjusting entry, and then to finally prepare that income statement. So these are the numbers that are in your textbook, so you can go back and take a look. I've summed them up here. So as you can see here, now that you understand job order costing, this is just putting journal entries to exactly what we have talked about with C&C Sports. All right, so we're going to start off with our T accounts, right? These are the T accounts that you are going to be responsible for understanding and knowing the flow here. You have 3 inventory accounts: raw materials, work in process, and finished goods. Balance sheet accounts have normal are permanent accounts, and so ending balances become beginning balances for the next period, right? So these are permanent accounts, and you can see I've put in the beginning balances for you. Cost of goods sold is an expense. It's where you expense and match the revenue to the cost of what you just sold. Income statement are temporary accounts. They always start back at 0. They get closed into the equity section on your balance sheet. So you won't see a beginning balance for cost of goods sold. And then here's your control account. Remember, your control account is a nothing account. It has to be 0 at the end of the period. And this is what you're going to look at when you are ready to make your adjusting entry, to put apply or to make sure that actual overhead ends up in your financial statements, right? So remember, the only thing that's going into your work in process is applied overhead with the predetermined overhead rate. Anytime you have an actual overhead cost, you're going to debit the control account. You just keep track of it here. All right, are we ready to start? So you know we're going to be starting right up here, right? You know that if you're going to be calculating net income, then you're going to have to start all the way up here to see the materials that are flowing to work in process. All right, so this is the first journal entry. During the year, C&C Sports purchased a total of $3.592 million in raw materials. All right, so this is, and I apologize for the crazy numbers. I just wanted to make sure I was going to use the same ones that are in your book. If I was creating this, I would have used 3.5, but whatever. So take a look at what we're doing here. Those raw materials, debiting raw materials inventory, increasing, right? Your raw materials warehouse. I have these materials in my warehouse, and then the credit depends on whether you're paying them now or paying them later, right? So you would record accounts payable if you're going to pay them later, or cash if you're paying them now. Right, so I'm not so concerned about this. As you can see, I didn't put up all the T accounts, but you know this company would have all of these T accounts. So there is the increase in my raw materials inventory. And remember, if I had given you this, it would include freight in or transportation in, part of the value of these direct materials. Okay. Everybody's good? Okay, during the year, 3.576 million of material was placed into production. Of this amount, 2.78 million was direct material and $793,740 was indirect material. Right, take a look at the entry that's being made here. First of all, everything that's coming out of that raw materials warehouse is credited to that raw materials warehouse inventory account, right? So think about C&C Sports. If this is direct material and indirect material, the direct material would be the fabric that is going to go into the jerseys we're going to make. The indirect material might be the thread that is going to be in the sewing machine that you can't measure exactly. So don't forget, they are classified differently. Direct material goes into work in process. Indirect material is considered overhead. But also remember that I do not put actual overhead into work in process. It can only be applied overhead with a predetermined overhead rate, which is why you see that thread going into that control account. Anytime you have an actual overhead cost, it does not go into your financial statements. You just keep track of it on the left side of the control account. Indirect material, indirect labor, and every other cost in the factory is going to be kept track of on the left side of the control account. All right, so let's post this. So let's do the direct material first. The direct material is going to come out of the raw materials warehouse. There is the fabric, and it's going to go down into the factory as as direct material in work in process. The thread is also coming out of that warehouse, but you're putting it into that control account. This is our first actual overhead cost that is going, and I'm keeping track of it here. Remember, the overhead in work in process can only be applied overhead using a predetermined overhead rate. Everybody's good with this? All right, you're going to stop me, even if it's, can you go over this again? Okay. Because this is the tricky part here. Okay, so now I'm telling you, during the year, $1.751 million of factory labor cost was incurred. Of this amount, 1.391 is for direct labor and 360,000 was for indirect labor. Right, so take a look at the journal entry. You are crediting wages payable. This is what you owe the people that have worked in your factory. Both the people on the assembly line as well as the supervisors, the janitors, the security guards. This is what this is what you have to pay them, because remember, they've worked, and you're either going to credit cash here or set up a wages payable liability account to say, I'm going to pay you later. But people working your factory need to get paid. So now I'm going to look at how I classify this, right? So if I'm looking at the direct labor, that's going into work in process. If I'm looking at the indirect labor, this is overhead, which is going to also be another debit to my control account. Okay, does that make sense? So here's the direct labor going into work in process. And here's my indirect labor. Considered overhead, but I only put applied overhead with a predetermined overhead rate into my books. Okay, during the year, C&C incurred the following actual costs in the factory. So remember, this applied overhead is a great way to budget and keep control of the costs on your jobs. But in the meantime, somebody needs to pay the rent and the utilities and record the depreciation of your factory equipment. So I'm trying to give you the idea here that this list is going to be long, and you're going to put it all into that control account, right? And you can see the credit is going to be to various accounts. I'm not worried about that. That's financial accounting. I'm assuming that you understand when you debit depreciation, you're going to be crediting accumulated depreciation, right? I'm not going to be asking you that on Wednesday. I'm focusing on you understanding the new flow through these inventory accounts into cost of goods sold. Okay, so all of those items just go into my control account. Right, and again, I'm trying to show you that this list is going to be long. I remember the first time I went into a manufacturing company and I asked to see the actual overhead cost. They brought out 7 books this big, right? So in your textbook, you get this list and you're thinking, oh yeah, that's a long list, right? In reality, it is every cost in your factory that is not direct material or direct labor. And I also remember on that job, it was the first one I did. Remember thinking, wow, they really use a predetermined overhead rate and apply overhead. You know, what I'm learning actually worked, which is always, just exciting for me. You guys don't seem excited. It's fun to see what you learn actually, you know, how is applied. Anyway, we're good with this, right? Actual, not going anywhere near your financial statements in that control account. Ashley.
Professor, can you remind us where the 793,360,000 is coming from in manufacturing overhead control?
Yep, that was indirect material.
Okay, thank you.
Yep, the first 2 was the indirect material. If you look over here, right? So it came out of the raw materials warehouse, and that was the thread. Oops, here, thread. Okay, good. Okay, now we're finally going to get overhead onto our books, right? So we're going to apply it with our predetermined overhead rate that we already calculated in last class. During the year, 1.739 of manufacturing overhead was applied to all of the jobs using a predetermined overhead rate of 125% of direct labor costs. So the predetermined overhead rate is 125%, and this is what I paid to my direct labor, right? If I go back here, I'm going to look and I'm going to say that rate is 125% of my direct labor cost, or basically for every dollar I spent in direct labor, $1.25 will be applied in overhead. So here is the applied overhead, 125% times that direct labor cost. Right, and so notice the entry. This is what I put into my inventory, applied overhead with that predetermined overhead rate. And the credit now goes to that control account. And you're getting to see how this control account is working. This is what I put into my inventory. This is what's in my financial statements. This is what needs to be in my financial statements at the end of the period, right? Actual needs to be there when I prepare financial statements. Okay, now I'm giving you all the period costs, right? So everything we've talked about is only what's happening in the factory. Outside of the factory, you're going to have costs as well. They're just not going into inventory and then expensed in cost of goods sold. They're called period costs because they are expensed in the period as incurred. They are going to be expensed, but after gross margin or gross profit, right? So I'm giving you salaries and commissions for your salespeople, the rent of the office next door, marketing expenses, right? All go into selling, administrative, operating expenses. And you're going to see that none of that is going into or getting posted to my inventory or cost of goods sold or the control account. We're just going to hold off on that because when we prepare the income statement, we put them under gross margin or gross profit. Okay, during the year, $5.914 thousand of inventory was completed and sent to the factory, from the factory to the finished goods warehouse. We are reclassing the inventory from one account to the other. It's done. It's no longer in process. So I'm taking it out of the factory and I'm putting it into the finished goods warehouse. And then also, this is your cost of goods manufactured. Cost of goods manufactured is everything that you spent for what you finished. And if you're seeing something leaving the factory, it's done, right? So that is also where you're going to find your cost of goods manufactured. And if we post this, you're going to see it leaving work in process. Remember, credit to work in process is your cost of goods manufactured. Anything that's leaving here is done. And where does it go? To the finished goods warehouse. See hands, everybody's good. Okay, so we're going to sell some of these jerseys. During the year, C&C Sports recorded sales of $11.596 million for inventory that cost $5.798 million to make. So this is just like a merchandising company. Two things, consider this as two things happening. Somebody just handed you money, right? Or promised to pay you money. Again, I'm not so concerned about this. This is financial accounting. But what I am concerned about is you've earned revenue and now you have revenue on your income statement. So you know that's when it's time to match the cost to what you just sold. So somebody then is walking away from your company with inventory because they just bought it. So you're going to have to credit the finished goods inventory at whatever it cost you to make it. And then you're going to debit cost of goods sold, matching cost to revenue. So here I can see that inventory leaving my finished goods warehouse and it's going to cost of goods sold because now I have revenue to match it to. Okay. I'm just making some points here to make sure. Remember those terms? Total manufacturing costs are everything you spent this period. This is where students get confused here. It's the total materials, labor, and overhead applied during the period. Cost of goods manufactured is the materials, labor, and applied overhead that went into what was finished, completed. Some of this is in incomplete inventory at the end of the period. Okay, so also notice here that I've summed up my T accounts, right? So it's time to prepare financial statements. It's at the end of the period. So I have my raw materials ending balance, debits minus credits. My work in process, all the debits minus the credits. Finished goods, all the debits minus the credits, and cost of goods sold. The problem is I have applied overhead, which means that estimated overhead is in here, and some of it is still here. It was in here, and some of it is still there in inventory that wasn't sold. And take a look at the size of cost of goods sold. Most of what you applied into that inventory is going to be in cost of goods sold. It's the end of the line. You make it, you sell it, you make it, you sell it, right? So what I'm going to need to do is prepare an adjusting entry, because now I do have to take the time to add up everything that I spent. Actual overhead needs to be in my financial statements. So I add it all up, indirect material, indirect labor, and every other cost in the factory. I spent $1.758 million, and I applied only $173,950. Right, so you can see here, I am under applied. I didn't put enough into my inventory by $19,550,000. If I'm under applied, I'm going to have to make an adjustment to cost of goods sold. That's 95 to 99% of the way companies are going to do this. And if I'm under applied, I need to increase cost of goods sold. By debiting cost of goods sold, I'm increasing it. That should say 550. This is in a different number. I'm debiting cost of goods sold by 19,550. And then remember, this control account needs to be zero. It has to be gone. It's only set up to do this adjusting entry. It's a nothing account. And when this entry is done, that account is done. The debits will then equal the credits. Yep. Yes. So when you look at this, as soon as I ask you, did you over or under apply? I want you in your head to think about like that little light bulb. I want to see that light bulb in your head thinking, I'm thinking about the control account, because that, now we're talking about that adjusting entry. The left side is actual, the right side is what you applied to work in process. So in this case here, I need to have $1.758 million in my financial statements, because this is what I actually spent. But when I look over here, what I actually put in, I am short or under applied by 19,550. I'm going to have to add it. Ashley.
Professor, you said that we added to the cost of goods sold. How come it's not on the T account?
Oh, well, if I did the adjusting entry, I just didn't post it. I would end up debiting by 19. I'm going to show you in a minute. You would debit cost of goods sold for 19,550 and then credit the T account, because by crediting this by 19,550, then your debits and credits are equal and this account is gone. And then you have that extra 19,550. And now your financial statements are correct as well.
Okay, thank you.
Yep. So here, what I've done is I've placed all of this information into that template that I gave you, right? So now it will make sense, because this is the most complex situation that you're going to see, right? So starting with the T account for your raw materials inventory, this is where it matters. Last time we used this template, the assumption was that all the materials were direct materials. If you're trying to get to cost of goods manufactured, which is step number one, you need to know the direct materials that came out of that raw materials warehouse. So you are going to get the credit side to that T account, but then you're going to back out the thread, right? Because you know that's not direct material, that is overhead, and that is going to that control account. So that's the extra step that I have there. Then there's the direct labor, then there's the direct or the applied overhead, and this is your total manufacturing cost. right? And then if you add beginning and subtract ending, what you're going to get is your credit side, add beginning, subtract the, ending, and you're going to get the credit side, which is your cost of goods manufactured. Once you have cost of goods manufactured, then you're able to do that finished goods T account. Just notice down here, when you're doing that finished goods T account, you're getting the credit side here. Don't forget to make that adjusting entry. So I didn't post it on the T account, but you can see I am adding it in this template. So here's my unadjusted cost of goods sold, adding in the 19,550, which it should be, I think, I'm not sure, I'll have to re-add them. What you're looking at is the adjusted cost of goods sold, which is what you would use in your financial statements. And by using the adjusted cost of goods sold, now you have actual overhead in your financial statements. And then here's all those period costs that we bumped out, that we said we were going to expense later. They're just not getting expensed in cost of goods sold. They are expensed after gross margin or gross profit to get to net income. Okay. Does anybody want me to go back and look at something, or how did you get this number, or I'm not sure how this flowed? Is everybody good?
I'm just a little confused when you took like the manufacturing, like overhead control, and you also put in the raw materials inventory. Am I asking like the question?
I know what you're talking about. This is the tricky part. I'm glad you're bringing it back. So when I'm looking at, this is the final one. When you're looking at what's coming out of that raw materials warehouse, remember, it's going to be direct material and indirect material. But direct material is going to work in process. You're tying those materials directly to the jobs you're working on. Remember, this is the summary of all those job cost sheets, right? So these would be all the direct materials that I could trace to those jobs, but then the thread, I can't trace directly, and that's overhead. But remember, I only put applied overhead into work in process. So that thread is my first actual overhead cost.
Why did you just put the 7?
Because this is indirect material and this is direct material. Remember, so indirect material, indirect labor are indirect costs that I can't tie directly, so we classified it as overhead. I only put applied overhead onto my books. So you can see the indirect material and the indirect labor, and then every other cost in the factory, everything that is not direct material or direct labor is considered manufacturing overhead and needs to get applied.
This one is direct material and direct labor that goes in the fall, or indirect.
Right.
Indirect.
Anything in the factory that is not direct material or direct labor, which is indirect material, indirect labor, and every other cost in the factory. Good. Now's your chance to ask. Good questions. That's the tricky part that I know is going to trip you up. Rihanna.
I noticed that I'm not sure what slide it is on your PowerPoint, but when we were applying manufacturing overhead to a work in process,
Yep.
that we also credited the
Control account.
yes.
Yep. Yep, so that's exactly how, so each one of these entries, we talked about how it all flowed. Each one of these entries has an offsetting setting credit, which is why I ended up with doing all of the journal entries out. Remember, you have a double entry system. If you're debiting an account, you're going to have to credit another account. So what you're going to do is you're going to debit work in process, and you credit the control account. That is the entry, because this is going to allow you then to be able to see how you're doing in terms of what you put into your inventory versus what needs to be in your inventory, right? This control account is keeping track of that. This is what needs to be in your inventory, but so far, this is what I put into my inventory.
Thank you.
Yep. Another thing that might be helpful to you too, in terms of the journal entries, here in all of these examples, I've listed these always as direct material, direct labor, and overhead. But in this problem, if I just showed you these accounts, how would you know that this is direct material, this is direct labor, and this is applied overhead? What I would do is I would look at the credits, right? If you're looking at, and you're telling me that this is direct material, I know it has to be coming from the raw materials warehouse, right? So I'd be looking for it to be coming from raw materials. If I'm direct labor, that means I'm looking for wages payable, right? Somebody has worked, their efforts are going into inventory, but the credit is going to wages payable. They have worked, they still need to get paid. I'm just not expensing it right away. I'm putting it into the jobs they're working on. And then the same thing with this. When you look at this, the way you're going to figure out whether it is overhead that is applied, the credit should go to the control account, because the control account is keeping track of what you put into the inventory versus what needs to be eventually adjusted into the inventory.
So just to be clear, the total everything that goes into the works in progress debit side, those are all the applied.
Always apply direct material, direct labor, and applied overhead. Think about those job cost sheets, right? Direct material, direct labor, and overhead applied with that predetermined overhead rate. Your actual overhead goes nowhere near your financial statements until you do that adjusting entry at the end of the period.
So would you tell us, like, this is the actual, like, how would we know how to classify whether or not the cost is applied or actual?
So I'm going to tell you, I used a predetermined overhead rate, right? Where I'm going to give you the predetermined overhead rate, and you're going to have to apply, and I'll give you the labor cost, right? It'll be pretty clear. And if you go back even here, right? What I said was, here's the, during the year, we applied overhead with a rate of 125%, right? And then here's the actual factory cost that happened. Actual, left side of the control account. Applied is what I put into work in process. Are we good? All right, so I'm going to put up a problem. Okay, so here I have a problem. So this is going to require you, now I have everything posted in here, and I'm going to ask you what it means, right? So this is kind of so this is definitely a more complex problem, but like I said, on your exam, you're going to have some problems that are just so easy, and looks just like all the homework or the practice problems I did. And then there's going to be some that you're going to be thinking, I didn't ever do it this way, but now I have to take a step back and figure it out. I know the concepts. Can I work and do these answers? And this is going to be the difference between the A's and the B's. Do you really understand it, or have you just memorized every problem that I've ever done for you? Right, so take a look at this problem. I'm giving you 3 inventory accounts: raw materials, work in process, finished goods inventory. Here's your control account. You know that actual is on the left and applied will be on the right. Here is wages payable. There's that liability. And then here's cost of goods sold, your first expense on the income statement. And that's where you expense inventory matched to revenue. Right, so this is partially completed. And so we're going to fill it in and then we're going to answer questions. Right, so the first question is asking you, what was the cost of raw materials put into production during the year? Is it Natra?
Yeah, is it 110,000?
110. So how did you do it?
I added 15,000 and 120,000 and subtracted 25,000.
Right, okay, so she knows that if I'm asking you the raw materials that were placed into production, that means they would have left the raw materials warehouse. So you know you have to understand how to calculate that T account, either by the equation or using the T account. I've done both in the slides. So you know debits minus ending balance is going to give you the credit side, which is $110,000. Okay, don't chat me today because I don't have a moderator. So just raise your hand if you, let me just see what this is. Yeah, so don't chat any answers today, just raise your hand. Ashley?
For the second question, is it 20,000 for indirect materials?
Yes, so the next question says, of this, what was placed into production, how much is direct and how much is indirect? And so how'd you get 20?
So I took her number of 110,000 and then I minus 90,000 because that's the direct materials and work in process.
Exactly. So you know where it's going. If you're crediting this account, you know it's going to work in process, right? Those materials are being sent to the factory floor. But I've given you direct materials of 90. So if 110 is coming out of the raw materials warehouse and 90 of it is direct, then the other 20 must be indirect. And Brooke, what account is that in?
I was going to answer for number 3.
All right, so not 3 yet. We're not done with 2. Do you want to answer 2?
Can you repeat it really
Yep.
quick?
How much of, so we said 20,000 is indirect material. So where is that other 20? Think about the journal entry that would have been made. You have to have a double entry system. This has to match.
In the manufacturing overhead?
Yep. All right, so in this control account, right?
Yeah.
Yes. So even though this is showing overhead and you know that indirect material is overhead, this is applied overhead with the predetermined overhead rate. So that is part of the $230,000. Okay. Does that make sense? So if you were to reconstruct the journal entry, it would be debit work in process, debit manufacturing overhead control account, and then credit raw materials. Go ahead, Ashley, ask a
Just a
question.
question, just to clarify. So the 20,000 is actual, right? So it's not in the overhead and work in process?
Correct. This is applied, always applied with the predetermined overhead rate. You're never going to see actual overhead on a job cost sheet or in work in process.
Okay, thank you.
Good. All right, so similar to that, how much of the factory labor cost is indirect labor and where was it charged? Hebo?
Yeah, that will be $35,000.
Okay, so how are you getting 35?
Like use the labor pay minus the direct labor.
All right, so give me your numbers because you're not quite right.
I'll use 185,000 minus the 150,000.
All right, so when you're looking at wages payable, let me just go back to this journal entry that we did. Oops, not there. Remember, if you're going to, so I understand what you're talking about, right? But you're looking at the debit to that liability, not the credit. So you're going to have a debit to work in process for direct labor. You're going to have a debit to the control account for the indirect labor. But the credit here, debits minus the credits, or debits have to equal the credits. So if I go back to this problem, I'm looking for the 180. Right? So think about that journal entry that would have been made to record this direct labor. I would have debited work in process for 150. I would have debited control account for 30, and the credit would have been to 180. Liabilities have normal credit balances. This tells you that you owe 180. If you're looking at this 185, that's what was owed last period. And remember how the liability works. You would pay them, and then you get rid of the liability and credit cash. So you're looking for the credit. Think about that journal entry.
Thanks, got it.
All right, so 30,000 is the indirect labor. Does it make sense? These are the tricky ones. Indirect material, indirect labor are the tricky ones. All right, so let's go to an easier question. What's the cost of goods manufactured for the year? Matt?
Would it be 470?
Yep.
Yep.
Exactly. Credit to work in process, right? If it is done, it leaves the factory. And where does it go, Matt? What would be the debit here?
I think the debit goes to finished goods, right?
Yep, perfect. Remember, if it's leaving the factory, it's done, and it's going to go right here. Notice that I'm calling this cost of goods manufactured, 470. Good. What's the total manufacturing cost? I already got you. Anybody else? I got that. Go ahead, Diana. 480. 90, 150, and 240 are your total manufacturing costs. Cost of goods manufactured is what you put into what you finished. Okay. All right, hands up. Do you have questions or are you waiting to answer?
Yeah, I have a question.
Yep, go ahead, Caitlin.
For 480 that you just said you got, like, is that something you just won't actually put the 480 like on the sheet just because I see 470, but I'm not understanding like what I would do with that extra 10,000.
Yep, okay, so if we go back here. Total manufacturing cost is not the same as cost of goods manufactured. Total manufacturing cost is everything you spent during the period. And everything in your factory has been broken down into direct material, direct labor, and applied overhead. This is total manufacturing cost. So you'd add these three up. Cost of goods manufactured, which is 470 in the problem we're doing right now, is the direct material, direct labor, and applied overhead that went into what you completed.
Okay. Okay.
What was the cost of goods sold for the year before, over, or under applied overhead? Caroline? 450. Did you get that too, Brianna? How'd you do it? Yep.
My numbers I know are different.
Okay, so, right, okay, so good. So tell me what you're doing. Because we're calculating cost of goods sold, right?
I mean, when you have to take the values, so I did a different number for what I had on my sheet. But I would have taken figure out what it would have been for the sold there.
Exactly. All right, so let's go figure out the credit, because that's exactly right. You're trying to get the credit side to the finished goods account, because you know, once you have the credit side, that was the whole idea. You're getting the credit side and you know where it's flowing. So Caroline, how'd you get 450?
40,000 plus 470,000.
Right. Debits minus ending will give you credits, or debits minus credits will give you ending. Right, so we know that the 470, and this may have been, did you do this problem ahead of time?
So my number, I just didn't have the 470 to get in my photo.
Okay, oh, okay, yep. So the 470, I kind of snuck that in. I know I talked quickly, I kind of added that in. So that wasn't there, but you know that once we calculated, somebody answered that's cost of goods manufactured, then I knew where it was going. So once I've calculated the credit side to finished goods, that's my cost of goods sold. Claudia,
How did you get the 470 for the cost of goods manufactured again?
given
Oh, okay, that was there. Okay.
the work in process is cost of goods manufactured.
Okay.
Okay, how about if overhead is applied to production on the basis of direct labor cost, what rate was in effect during the year? What's your predetermined overhead rate? Caitlin,
Is it 104%?
no. Do your math again. Or you know what? Tell me how you're getting it. Because we're running out of time.
Yeah, I just divided 470 by 450, but I don't think that's right.
No, so what I'm looking at here is that we're applying overhead based on direct labor cost, right? So you know, normally you're taking estimated overhead divided by your estimated application base. You don't have any of that information. This is the example of this requires you to really kind of think. What I know is the actual application base, they really worked paid $150,000, and I know how much was applied. So what number multiplied by this is getting me 240,000. Right, so if you think about the way this is a work backwards problem, right? So what rate times 150 actual application base or direct labor dollars is giving me my applied overhead of 240. So the rate must be 160.
Okay, thank you.
Yep. And then the last question was a tricky one too. What's the balance in your ending work in process? So you know debits minus credits is 30,000. But now that you know that, assume that these consist of goods that were, let me move down a little bit, entirely of goods started during the year. If 8,000 of this balance is direct labor, how much is direct materials and how much is manufacturing overhead? I like this question because it forces you to think about what that $30,000 means. Those are the incomplete tables at the end of the period. That's the materials you put into them so far, the labor you paid so far, and the overhead that has been applied so far. So if you understand that, and I tell you of the 30,000, 8,000 is direct labor. You can calculate applied overhead and then back out the rest of it must be direct material. Right? If the balance is 30 and labor cost is 8,000 and we just calculated the rate at 160% of labor cost, You know that 30,000 is made up of 3 product costs: direct material, direct labor, and applied overhead. The rest has to be direct labor. So all of these answers will be up at 2:15 today. These are, and there's another problem in the slides like this where I gave you the T accounts. It's from the back of the book. So after you've gone through this, you can go try that one on your own, and then I have the answers in the slides as well. So again, these are really, I'm trying to make you think about this so that by the time you get to the exam, you're going to say, that's all you're asking me, right? I know exactly what's happening here. That's my goal. Just remember, even though this is our last class, you have text me, right? I have office hours today. If you want to come, sign up under the sign up tab. And then I will block it out into, I'll send an email telling you when to come. The TAs are still having office hours. And remember, you can text me, screenshot what you're looking at. All right, so I'll be around. Text me if you need me, or text me if you have any questions, or email me. Yep. I don't have office hours tomorrow, but the TAs have hours. So make sure, especially our homework is due today. So, you know, TAs are perfect for homework. They have all the solutions and they know exactly what to do to help you out there. Get the exam done. That is the biggest thing. You won't even be able to take the exam if you don't go in and set up your exemplify.
What you're talking about is just something that makes you like learn how to use a highlighter, right? And like calculators, stuff like that.
No, you have to go in and make sure your software works because it's all your software. So they give you a code, you go in and you do a little exercise. It'll take 2 seconds, but it will make sure that your system will be able to upload the exam for you. Yep. See you Wednesday. Wednesday will be on Zoom.
Thank you.
See you later. Do you guys have questions? Ashley, do you have questions or you're just kind of going through stuff?
Yeah, I'm just digesting what's on the screen.
Yep, okay, all right.
Actually, I have one more question.
Yep.
So you said like throughout the lecture today, like there's a few things that like, you know, like debit and credits, like AC221 stuff, that we didn't really have to be tested on. But then you said like we have to build an entire income statement. So like, does that mean we actually do need to know that?
So I'm going to ask, if I ask you what's cost of goods manufactured, what's cost of goods sold, what's net income, right? You should understand how you would have to prepare that and where you would find those numbers. Not necessarily I debit, you know, I debit the control account and credit cash or credit accumulated depreciation. I don't really care about the credits. What I care about mostly is that you understand the flow through these 3 accounts. So notice, even though I gave you the full journal entry, I'm concerned that you understand the flow in these inventory accounts, cost of goods sold, and the control account.
Okay, because like I was like confused if we have to know like the order of an income statement, because like for example, like an income statement, there's not going to be like a manufacturing, or no, there's not going to be like a work in process thing, right? Because I remember like the regular income statement for AC221 is different.
No, it's not. It should be the same. Your income statement, instead of, this was a 2-step process before, because you calculated the ending balance in your inventory. You only had one, right? Credit side to inventory. And then you use that because that was your cost of goods sold. Now you're looking at is the flow or the incomes of the 3 accounts.
Oh, okay. Okay.
Right, so take a look at that template I gave you again, because before, instead of having finished goods inventory, you just had merchandise inventory. So you had beginning inventory plus purchases minus ending gives you cost of goods sold.
Oh, okay. All right. Thank you.
Yep. Yep. As you're going through, Ashley, just text me or email me with questions.
All right. Thank you so much. I appreciate it.
Yep.
And Professor, I just want to make sure, like, is this what my example is supposed to look like to know that it's fine? Like,
So
know
you
I'm
went
supposed to-
through and you got to do the exercise?
Well, because I had this from last year, so. I
Yeah,
just
no,
went on and I-
there's instructions on the people that did it last year. There's something that you have to do as well. So under the resource tab, I give you where you have to go in.
Okay.
And there's a little exercise, whether it's new or whether you've used it already.